Good morning, everybody. How you guys doing? What is this? Pores can talk? Well, the first thing I'd like to do is a big shout out to today's stream sponsor, Bithead of the Pigeon Whales. Bithead, thank you so much for creating so many fucking cornichons that I couldn't rightfully keep the chat closed to them. It's been amazing fielding requests to enter the Dillionaires Country Club from hundreds of them this week. Also to Tom Tom, Fiscal Stupidity, Logic Dustbin, apparently. It's just been fantastic. Logic Dustbin, thank you so much for the 5 memberships, dude. I appreciate it, man. Cock Magic, thank you so much, dude. I appreciate it, man. Welcome, extra Cornichons. Porous can talk? Yeah. Nothing like waterboarding the conversation when actual adult discussion is necessary. Fair enough. I can still see the difference in color. It'll be okay, Lawrence of Arabia, trust me. I paid good money for exclusivity. How to accept gift? Click the thing and turn on like the last membership donation and turn on gifting. We aren't poor, we're future millionaires. Yeah, but that guy's an idiot, right? Like, thanks, kind grifter. No problem. Comfort me that we're going to run into the split. Uh, let's get some of the big questions out of the way. And we'll get into this. Why is Permable JFresh turned to the dark side and joined farces with Darth Gaff? He's just read too many documents in the last week. This happens. You read enough financial literature and you just get bearish on everything. It's okay. He'll be all right. It's just a phase. At the money CS weekly CSPs look pretty lucrative on BBBY with a relative amount of safety. Thoughts? At the money, like in the money, or at the money, out of the money? You're just gonna sell them at 5, or are you selling them at like 550? Because getting assigned on this could suck, especially if you don't want the extra shares. Also, they'll be worth less on Monday. Don't forget, because of theta decay. Spoke with steel industry higher ups and friends with IRL about the steel industry, and they're all currently prepping to shutter operations due to incoming Chinese steel from tariffs lifting. Interesting. It's problematic. I'm out of X, but hmm. Is Elon gonna buy GME instead of Twitter? Do you want him to? Nasty Nate, thank you so much for the memberships, dude. Everybody, shout out to Nasty Nate, Cock Magic, and Logic Dustbin for hooking you guys up. How dare you? I gotta get the shit talking out of the way, right? The economy and chat that has been created can't last. Elites outnumber the poorest. Chaos will ensue. Hyper member inflation will occur. How do I DRS my membership to avoid losing everything? Given our unusual price action matching the SPY, what do you think the overall market is going to do? Chop until CPI data Wednesday, SLD? Monday and Tuesday, we could continue to try to push up. I don't know how many buyers are left at these prices, honestly. Unless there's some big fundamental change. I mean, Friday, I think we saw a lot of shorts just repositioning to capture the new high. It doesn't, it just doesn't look attractive. Looks like we've kind of double topped here. Volume is decreasing into the peak of the run. We got rejected on volume to the downside. So, yeah, I mean, I don't have like, at least from a technical stance, I don't have a lot of confidence in a lot of price improvement in the S&P over the next few days. And then, yeah, once SLD hits, historically, it's just downside, right? We'll be most certain if we're heading for an OPEX or a NOPEX. I don't know if we're going to get any more certainty than what we have. There's a I'm, there's a part of me that feels that they are prepping in a way for the split. They're reducing exposure as much as they can before OPEX in order to ensure that, I mean, God, they really don't want GameStop to run hard for the split, right? That's got to be their key concern there. And it could anyway, but it just seems like it exposes them to a lot of risk. I would say that not running Friday might be bullish, but we'll see how ETF liquidity looks going into tomorrow. Because it could just mean that the negative delta we saw exercised in January had to do with something entirely different. It could have been a swap, it could have been a number of things. I got out of X like the Friday before last when I was on stream. I told everyone about it. I'll probably get back in, but with the tariffs being lifted, that's a huge amount of risk. I don't think I want to carry it through that. I'll probably just buy back in once it finds a stable floor. What is the best time for a split to happen during OPEX? I mean, provided there's an OPEX run, that would be the period of time in which FOMO, especially at the top of the run, when FOMO presents the most risk to anybody trading volatility on GameStop or anybody needing to short GameStop. And the split occurring during that period of OPEX specifically where, the effective date is placed. generally that's when FOMO is dying down, and that would increase volatility and interest, right? Because now you have these much cheaper options, which are far easier to YOLO into. And that's generally the point at which, the market maker is kind of pushing out the rest of the gamma imbalance, and then the price is going to start coming down versus, what could happen if the effective split is on that date, and we do have an OPEX run. That's going to put a lot of pressure on those positions. Well, deferred exposure from June alone would be fucking VUP with the current illiquidity. I mean, it could be up. I don't know how much VUP it would be. And that relies on a lot of things that we can't see in the data, right? Like we know they didn't cover that exposure in June. But at the same time, it's a I think there was a worry that, we don't want to make too many assumptions, right? We don't want to assume something is going to happen without having proof of it. Some folks are asking if you can turn on Discord audio. Well, no, because I'm doing a thing, and then it's gonna, like, the audio is not gonna go over to the Discord, so it's kind of problematic. Let me see what I can do. Maybe yeah. Yeah, I think well, yeah. So the problem is that this is gonna cut out in a minute, but whatever. Since we're keeping the same chain, is it not a good idea to hold contracts through the split? Oh yeah, it should be fine. Since the OCC has come out and decided to do kind of the opposite of what they should do in the event of a dividend split. Where did the exposure go? I mean, it's likely deferred. But again, they're always a few steps ahead of us, right? And even though most OPEXs end up resolving in the same manner, um up until they do, there's a little bit of mystery on, like, what little fucking facet they're going to change each and every time, and they always change something. Either it be in the price action or the deferrals, or the no pexes like Feb and June. It's and obviously, you get hit with the same stick enough, you become more cautious. Can Kenny just split his synthetic shares? Not really. Sort of, but no. Do you expect BBY to track with GME pre-post split? Looking to pick up some 5C, 10C, 123. No, I don't expect BBBY to track with GME due to GME's split. It may run due to OPEX, but that's a totally different story. They have their shareholders meeting next week on Thursday. Those puts expire Friday. It's a different position, right? It requires a whole, probably as much analysis as GameStop does. It's just not something that I can put that much time into right now. right? Like I mean, I do my best, but why is the Genie split being compared to the Tesla split? Are they at all comparable? From a fundamental stance, no. Technically, I mean, they are similar in the execution. The Tesla split was a forward split. At least, not a forward split, a share dividend split, right? So, I mean, I think that's what people are comparing, but there was a lot more to the Tesla split than just the split, right? It was coming off of a market crash. You know, their forward expectations were growing. Elon was saying shit on Twitter. FOMO was insane, and lots of people were, flush with cash. So, and institutions were looking for things to get in on. So there was a ton of institutional interest in the Tesla split, which we may not see in GameStop, right? GameStop's already, probably near its current value, if not above it. Whereas, Tesla was considered very undervalued at the time, as it was moving into its split, especially coming out of the COVID crash. Has this shifted to wait and chase if we see the volume? No. I still plan to buy into a position. And then yeah, my risk tolerance for that position will be lower, right? Like I don't plan on carrying it beyond the OPEX period. I don't plan on, you know, holding it through a massive drop. Like, I'm going to, we're still in a bear market, right? Dominic. You do a split if MOASS is caused by a split. No. Why are the CFO and the CFO departure and the split so close together? Did one of these events force the hand of the other? We have no way to know. What's the significance of the chain not splitting into a new chain? Round numbers on the chain tend to attract more OI. Would buying 160, 40, 120 strikes pre-split make sense to ensure you have strikes with more OI post-split? Okay, so for the second part of your question, yes, the part of the chain that is liquid now will also be liquid post split, right? Because they're just splitting the chain. They're not creating a new chain. Um, you know, uh, with the volatility positions in place on GameStop, even though they're smaller than they were last year, they're still there. Uh, a split, like creating a new chain, would create a significant amount of volatility on GameStop, right? Because they would have to re-hedge those volatility positions on the new chain. Um, and it could be possible that something that OCC doesn't want to happen, and so they're just keeping the same chain and splitting it, which is really not what they're supposed to do in the event of a share dividend, but it's what they're doing. What's up, Johnny? Doing all right. You think a comparison to Nvidia split last year is viable? Trade Spotting has a nice PDF on it. Wasn't Nvidia a forward split? I think it's a bit different in the accounting. And there's another difference that I'll get into in a minute. Would it be more risky for them to issue everyone their share dividend and take the FTDs for any they don't have to provide, or to cash settle and then have loads of degens place orders? I mean, they may just take on the FTDs, right? For anything not provided back to them. But essentially, they can just increase the balance of the loan, right? Um, it does change leverage risk because it in effect multiplies uh, or creates a larger multiple on the short position. But that's only if we go up post-split, right? And they don't short the fuck out of us. Is it better to be undervalued or overvalued pre-split? Does it matter? It's better to be overvalued pre-split. Absolutely. That's a good reason for a split, right? Is because your company is currently overvalued. Can June deferred obligations be covered anytime before they are due? Would they maybe bleed those into the stock this week to prevent VUP next week before the split? I mean, we'll see. It's definitely something that we're going to be keeping an eye on is, increased uh volume and price action price improvement over the course of this week. We expect to kind of be shorted pretty hard this week, at least from a timing perspective and positioning in the options chain. So I would say that if we are seeing increased volume and price improvement through this week, that could be indicative of covering in advance. Generally, a share recall, if it were to occur, would occur probably a few days before the ex-dividend day. And in the case of this, right, because they essentially can get the shares back at any time up until the 21st, we may not even see one until the next week, like the week of OPEC settlement. If one occurs, I mean, smaller funds they might not want to take on the risk. Bigger funds, maybe they don't give a shit. If BBY goes bankrupt, my disappointment will be extreme. I don't think they're in danger of that right now, but their turnaround could be very slow. RC for sure watches the stream. Placing a split on OPEX is not a coincidence. We'll see. Would it be more risky for them to issue everyone their share dividend and take the FTDs? Oh, okay, answer that. Yeah, the new shares get wrapped into he's Jay Fresh is correct. The new shares get wrapped into the short agreement. There is something that can be FTD'd, but I'll get into that in a minute. Overvalued but under cost basis sounds pretty worrisome. Only way for profits is a squeeze or successful options execution. Overvalued but under cost basis is pretty worrisome. Yeah, I agree. It's definitely tough for people who have a higher cost basis. Yeah, successful options execution, averaging down, right? Growing your position. There's a lot of ways to reduce that overexposure. So it's not a lost cause, and GameStop's price action is still extremely volatile. you know Are you bullish or J Fresh for this week? I'm pretty J Fresh for this coming week, which means Kenny's gonna run the stock, right? VWAP puts will expire or possibly roll on 7/15. What price impact? And when do you see in either scenario? Hold on one second. I usually buy options with far dated strikes to protect against NOPEX and preserve theta. Does anything change there when implementing the strategy with the split? No, not really. I mean, that's kind of the same strategy I employ. I buy enough theta that I can ride the contracts through that week, and then whatever happens, happens. Kind of like June, right? Where I held them till Friday. Uh, I saw the market maker pricing down IV, and I got out because that is not something that happens on an OPEX run, right? IV doesn't go down. Um, so BBBY puts will expire or possibly roll on 7/15. What price impact? And when do you see in either scenario? Okay, that's the part that has me confused. What do I see in either scenario? Well, if they roll them forward, the price is going to continue to remain suppressed below that $10 level. If they get pulled back, um, then obviously, the chain on BBBY is stacked. If the market maker begins to start hedging the positive delta there, and is no longer pricing BBBY like it's going to be going out of business, then yes, I think it could really move. I think the events of the shareholders meeting and whatever happens the following Friday will play a significant impact on how that short position is managed, right? If you're asking if it's going to pop because they're rolling the short position, I don't know. It could. It depends. They can just short the stock while they do that, and prevent it from breaking out while they reposition. Post split means more liquidity if retail sells shares. Is that right? Yep. Do you think RC's BBY calls are an IV play, or legit him putting his money where his mouth is? Hmm. I think they were the cheapest way to represent ownership going into before writing the letter to the board. Simple as that. I don't think the leaps are an IV play. I don't think they're like a position as much as they are leverage for his negotiations. What date does the options chain divide by 4? That's correct. It doesn't, the effective date. It's not going to be splitting into 2 chains according to the OCC. They released a memo on it, which is highly unusual. Um, Myself included, post split give a lot of people opportunity to sell CCs who previously couldn't as an option to average down. Not only that, it'll give people a lot of opportunity to sell CSPs as well. Right? As long as the volatility in GameStop remains high, post split, which generally it does, volatility usually goes up. The tradability, well, I'll get into this more later, but the tradability of GameStop goes up in a post split environment. Um, I'm not bullish this week. Then 718 should be VUP. We'll see. I mean, yeah, that's when we expect the price to move anyway, at least based on the OPEC cycles. What are some options to lower your cost basis on GME? Selling covered calls, DCAing, selling cash secured puts, not really lowering your cost basis per se, but you know, you can use your knowledge of GameStop to capitalize on that and also increase your shareholding. Or you can use that as a way to DCA. On options, theta preservation for this run, what strikes are you looking at? I employed the same strategy for June, offloaded my options Friday when NoPEX was confirmed. Um, same strategy, buying far out of the money first, less delta sensitive contracts, moving closer to the money as we approach the settlement period. As far as time, probably just August's. I don't really see a need to buy further out than that. I could buy October's, but it just seems like less leverage and more money for additional theta that I'm not really gonna use. I mean, like, August is only gonna have like 1 or 2 days of like worse theta decay due to being like 30 DTE and falling into that more accelerated range of decay. Um, what do you think the reason for the OCC to decide on splitting the chain instead of having 2 separate chains? I'll go over that in a minute too. Want to post split, also make options cheaper for GameStop, and also the ability to exercise options cheaper, forcing real shares to be bought by the selling market maker on the lit exchange. Yes, provided that liquidity isn't released, right? There's a risk there, psychologically in the market. When people have more shares of the stock, they are more willing to part with them. And it is true in almost every instance, right? So, some liquidity will be released back into the market. The question is how much. I know you're in on Bobby play, but somewhat annoyed to talk about it all the time. Most of us in it now embrace that half of the discussion. That half the discussion will be Bobby now. It's not that I'm like annoyed to talk about it. It's just that there's nothing to talk about. Until 7:15 when those puts move, nothing interesting is going to really happen there. Volume might pop up, but like we don't know anything more about BBBY now than we did 3 weeks ago because nothing fucking changes. It doesn't matter how many calls you buy, it doesn't matter how bullish people get. You just have to wait, and people can't accept that, and so they want to talk about it all the time, but it's really just like a wait and see kind of event. Can you expand on your thoughts? The ETF? Yeah, I'm going to Bathcat in a minute. I'm going to go into all of that in a minute. Does DRS remove share locates? It doesn't remove locates. It just removes that share from being located. Right? So they can still locate other shares. They don't give a shit, right? They'll locate the same share 5,000 times. If shares are lent to borrowers and borrowers, there's no serialization, right? So all shares are the same. So whether you remove a locate or you don't, it doesn't matter. As long as there is one share to be lent, it will be. Has Jimmy ever crossed Gamma Max in after hours? Yeah. If so, what did that mean for the next day? I mean, it doesn't really mean anything, but generally when it crosses Gamma Max in after hours, we're so much FOMO is coming in first thing in the morning, like February 2021. There's so much FOMO coming in the next morning. The Gamma Max is rising exponentially. Previous NOPEX, we need to offload options on Friday. This turn we have the split on Friday. It's on Thursday. The effective date is Thursday, isn't it? Yeah, right? Or no, it's on Friday. Shit. That's a good question. Will you hold these options longer this time around with the split dynamic? And hold on, sorry, I missed the second part of that question, dude. If so, how much longer? Maybe into like the T+2 of the following week? And if they continue to overperform, right, like I'll just follow the trend. But if T+2 the following week we haven't seen anything occur, then yeah, I'm probably not going to continue to hold them, right? Gen 950s are super cheap now, down from 460 to 250. Yeah, they're pretty cheap right now. Still a solid IV play. It might be better than the October 390s now as well, but still less delta exposure. So if we run really hard, they won't see as much improvement as the Octobers. Do you think it's more likely for people to sell shares given retail's conditioning on buy and hold? I think a lot of people own GME besides the people on Super Stonk. Do you think it's more likely for people to sell shares given Bobby makes me laugh. Thanks to you, I've been trading options level 1 since March, doing CCs, CSPs. I applied at the next level up via TDA and got rejected. How does one get a broker to see you're ready for more? Put more money in your account. That's all brokers give a shit about. frankly. Like the more money capital you have available, the more interested they will be in working with you and giving you additional leverage or additional options permissions. If you got rejected for level 2 options, you're probably telling the broker too much of the truth. Axaw, thank you so much for becoming a Dillionaire, dude. Hit me up on the Discord after the stream. I'll get you added to the country club, man.
Happy birthday, Gurk. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold it afloat. If you are what you eat, that makes Gurk in the goat. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies, while I'm selling CCs like another fucking moon win. Praise be to RC and the VWAP, please, cause I need G and me to move soon, man.
Is there any tax implication in the lender agreement where the lender of the shares might be incentivized to recall their shares? So yes, it is. There is a tax advantage to recalling lent shares before a split. Whether they'll take advantage of that tax incentive, we don't know, but there is one. PayPal messed up my sub. Oh, it shouldn't be PayPal. It should just be on YouTube, right? Like YouTube process all the membership payments. Will the split have any effect to the float size of ETFs? Thank you, by the way. Appreciate it, man. Will we have a better indication of how much creation redemption was done? No, it shouldn't affect that. After said statement above, will that allow gamma squeeze ability higher since the ability to exercise becomes easier for more of all retail? Potentially, yeah. Yeah, the potential. I mean, it puts us at prices that we were at, like going into the January run, right? So yeah. Although again, the additional liquidity means that squeezes in and of themselves are less likely. So I think it's kind of just nothing, right? They just sort of cancel each other out. Will you cover best and worst case scenarios when it comes to the split? Our worst case scenario, we trade flat and down. Best case scenario, we run up super hard. Um, I think honestly, like it's just as simple as that. Like we're gonna have to see what happens. Obviously, we do not understand all the exposure present on GameStop. Although I think we understand a significant amount of it. Uh, there could be things that we have missed that are unreported that are, maybe, it could be something as simple as a lender just, not accepting any additional risk in a position because we're in a bear market and, returns are down on the year. And that could cause a share recall. It's really out of our hands. Some might look at it as waiting time. I'm looking at like an accumulation period. I mean, it is in a sense. How come rehypothecating share locates won't have dire consequences on the distribution of the dividend split? Because they don't care. Like they can just add the debt, right? They just rack up debt and assets, you know, their assets are someone else's liability. What typically happens to an options chain post split? Is there usually a rush of liquidity into the chain? Yes. Typically the chain becomes much more liquid after a forward split. Usually reverse splits split the chain, or not reverse splits. Share dividends split the chain. The reverse splits do too, but so it'll be interesting. But yeah, the OCC is moving forward with a singular chain, so the liquidity in the chain that is there now will remain, and then those options will get much cheaper. Also note that you, as an options carrier moving through the split, will be exposed to increased leverage risk, right? So, you're going to have more contracts if you carry contracts through the split than you did previous to the split. And so, your position will be more sensitive to fluctuations in the underlying price. Is this the most excited you've ever been about GME? It's up there. Witness me, if we drop below 120 this week, I will become a pigeon whale. Dear God. I don't know if everybody has a power that you should be in possession of. If we buy stock on the morning of the 18th, will we get the dividend on the 22nd? If you buy stock on the morning of, you know, the 19th or the 20th or the 21st, you'll still receive the dividend. Is it because in lieu of taxes implications are higher than the actual dividend? Well, yeah, because the dividend would be considered long-term holding, right? Whereas, cash received in lieu of would not. It would just be considered income off of a lent position. BBY puts increased Thursday for Friday, 140K to 193K. 36% increase. Do you think we see big downs on BBY this Tuesday, Wednesday? I think they're just stabilizing the position. I don't really think they're forcing anything lower. Remember that last week they also shed a very large chunk of their like 450 and $5 puts, right? Which means they had to back off of their slow grind down to zero because of the pressure of the price action working against them. When does price discovery start on the split shares? Market open the day of the split goes into effect. What is the time period where you buy a GME share when you are not entitled to the split? After the effective date. Once it's effective, you would no longer be entitled to the split. Everything bought up until the effective date will be entitled to the split. If you sell before the effective date or before you receive the dividend, you won't receive any shares. So it's a little bit different than, I mean, it's a little bit different than like a cash dividend, right? So like a cash dividend, if you own all your shares into the X dividend date and then you sell your whole position, you'll still receive your cash dividend when it's released. When Rory could go load into leaves, did he expect Jimmy to hit and surpass the strike? Or do you allude to just trying to 3 to 4x the value of his calls through gradual stock price increase? Yeah, I think that's what his main assumption was, is that, those calls were underpriced, and they were. Like, very much like BBBY, right? Where calls are extremely cheap. He felt that the calls were extremely cheap, and the price improvement due to the console release cycle, which is when he first started buying his calls, would increase the value of those leap positions. Is there anything we need to be concerned about if we hold GME shares in a margin account and the shares are marked for use for collateral? With margin, if they're being used as collateral, if you're actively using margin, then yes, they could maybe not issue your dividend, or they could issue it as cash. So that is something to be concerned with. Will we need more theta with split end options? If you feel like you do. This has probably been asked a ton. Is it likely that we fall below 120 again next week? It's possible, yeah. Trying to avoid the rabbit hole crime, do sex, catch-all lame explanation, but also trying to reconcile the oddities we keep seeing WRT GME from a compliance angle, i.e. OCC memo on the GME split versus dividend. Am I reading too much into this? Should I take my meds? Probably. There's a lot of shit going on right now. It's kind of a clusterfuck. So I understand how you feel. It's hard to focus on just one area, and there's a lot of things that need explaining. But relax. It's going to happen, right? So one of the best answers will be waiting and seeing what happens, being prepared as best you can for it. And I think that's going to be my focus over the next week, is just being as prepared as I can be. Yeah, no problem, man. Getting a fractional option, sort of, yeah. Does pressure from BB Boy and Jimmy simultaneously actually do anything, or do you think it's different shorts at this point? I think it's kind of different shorts. They're in different baskets. They do have some relation, but I don't know how much. I'm positive that the exposure over on BBBY is not nearly as high. Illiquidity is totally different. Even the ETFs it's contained in are vastly different from GameStop. So, there's some relation, but not a lot. Assuming that they're the same, or that they're going to do the same things, I think is kind of foolish at this point. If we do get a recall, would that be the final squeeze? Meaning that once the price comes down from the squeeze, GME becomes a long-term play. Who knows? I mean, if no one fucking sells, it remains illiquid, why would the volatility players walk away from it? It's so fucking profitable. I think the battle will continue on. Why does a rush of liquidity mean price-wise? Up or down? It doesn't necessarily, it just means more activity, right? It doesn't necessarily mean the price goes up or the price goes down. It just means that the stock is more liquid, it's far more tradable. Institutions that may have stayed out of trading GameStop due to the inability to buy large positions on the lit exchange may now very well be extremely interested in trading GameStop. GameStop could become way more exciting post split. I know a lot of people are worried that it's going to kind of just die off after the split, but I don't see it that way at all. If anything, I think this position is going to take a big turn after months and months of watching a million volume fucking traded a day in the $2, $5 range. I think things are about to change for the better, especially for those of you that have been preparing yourselves to actively trade stocks over the last year and a half. I think you're going to be in a really good position to capitalize on that. Have you discussed more with JFresh the two theories, ETF obligations versus MM hedging? Which is correct? Are you still a firm believer in ETF obligations causing OPEX runs? I'm a firm believer in both of those aspects causing OPEX runs. And I do not like to see one of them missing. So I do agree with JFresh that there is a risk here. 40K is supposed to settle on the 14th. Really hope that Ivy and price come down. Believe me, if we go down to like $100 this week, JFresh is going to get a lot more fucking bullish. GA? GA what, Rob? GA? I don't think June 6th was the only large after hours run we had. If I remember correctly, something similar, April 2021, might be worth looking into. We've had a few, actually. Yes, obviously that wasn't the only one. We've had others. I'm aware of the one in April. There's February of 2021. There's several other large after hour runs on GameStop. Almost anytime news was released, even though people didn't pay attention too much to it. I hope you're well and having a wonderful weekend, that you exited about the next 10 days of chaos. Excited about the next, sorry. Can someone tell me how much I need to donate so the stream doesn't always revert to 144p? I think that's a donation that you need to make probably to your cell phone carrier and not to me. But I'm sorry that happens. I even have it set for like, we're not trading today, so I don't have it set for like ultra low latency. So the quality should be better. What's your perfect scenario next week going into the split? Uh we drop like a fucking rock into like next Thursday, Friday, start to see a slow climb on Friday, and then really start to move on the ex dividend date and going into OPEX. I mean, that would be ideal. I would like the price to go higher before the split occurs, one way or the other, whether it be a rapid climb or a slow climb. If we had $100 this week, I'm YOLOing my mortgage into calls. What you guys have to understand is that, especially like for people like me and JFresh, that are so deep into the research on this and trying to track GME's price movements, is that our emotions will flip on a dime. We can be bearish as fuck one day and then bullish as fuck the next, right? Because we're tracking this data all so closely, and these positions move, they change. It's not a permanent fixture of our personality. It's just we are what we see in the data. Like, our emotions are representing what we're seeing in the data. I think everyone feels like if we're bearish forever, and it's just not the case. Looks like a consolidating pattern around the yearly VWAP and the GME daily. A price touch yearly VWAP no less than 14 times on Friday. Does this mean a breakout soon? It very well could. I think we got rejected pretty hard on Friday though. Big Diggler, I think you got censored there. Give me a second. I don't want to clutter up the stream with another Ko-Fi for a thank you, but felt it was warranted. Oh, so well, I'm gonna read it anyway. Against all odds, I've somehow become better, read, less shitty trader. Go figure. Thanks, man. I'm glad to hear that. Seriously, it's always great to hear that you guys, when you are making money instead of losing it. And I think more and more every day, there's more people doing better. Maybe not great, but better, right? More risk averse, more planned. Even Cock Magic's stupid fucking ass. I know you're in here. Is like planning shit out. He's trying to hedge his downside, and that's fucking awesome. And sure, sometimes you got to lose a lot of fucking money to learn that lesson, but once you learn it, it's very, very valuable. Now, whether you choose to learn it with your own money or other people's, that's a decision that's entirely up to you. But I think the confusion is that people on Discord don't realize I'm not a bear, just a cat in a bear costume designed for the pug I stole it from. Fuck that pug, right? I mean, he didn't need the costume. When looking at August strikes, do you like the 19th and the 26th? Not a 10 OI on the 26th, but I like the extra theta. I don't like that it's a weekly. That's the problem with the 26 is that the spread is wide and there's no open interest currently. Now, open interest could pick up if we run through the split. That strike, like that expiration date, could become a lot more enticing. But right now, it's kind of lackluster. We may see September's open up soon. All right, now where's the fucking cat? Me and the cat are gonna Me and the cat are gonna talk some shit. So for those of you guys listening in on Discord, this is going to end uh the Discord conversation here. Well, unless wait, hold on. Can I? No, I can't. I don't know how to do that. There's like a way for me to put speakers on, but that seems difficult and I don't want to learn how to do it. So, um yeah. All right. Get your ass in here, cat. Why do I have no sound? Are you saying things?
Can you hear me?
Yeah, I can hear you. There you are.
What's up? Can everybody else hear me? I had
I
to
I
turn
think
off.
yeah, I think everyone can hear.
Yeah, you want to talk split?
Which part? Which angle? There's so much shit.
There's, well, yeah. So I guess the biggest one is there's a lot of misinformation going on around the split, and it's been really hard to try to dig in and figure out what is real and what is not.
Yeah. Well, I mean, split dividends are rare, right? And there's not a shitload of documentation on them. They're really not very common. Most companies just split their fucking stock, and we don't have to worry about these kinds of things. But yeah, I agree that there is even for me, even me like looking into the research papers and the rulings and everything, it still feels like there's a lot of things that can go either way. You know, like it's hard to assess where the truth is in a split dividend.
Yeah, and if you compare it to like all of the transactional mechanics that the DTCC has, they have a manual you can go and look at, and
Yeah,
they
I've
tell
I've
you,
I've read it.
yeah, but they'll tell you just for regular transactions, they'll tell you, in great detail what are all the different selections you have to make within their fast system to enact these different types of transactions. And I was trying to find something equivalent to that for dividends, and it's just kind of the documents that I've been able to find are just really generic and sort of opaque. It's almost like a sales pitch to people more than like a here's the mechanics of how it happens. But for all I can find, I mean, there's nothing really super special about a split dividend as opposed to just a split. I mean, it sure, like the delivery mechanism might seem a little bit different, but in the actual underworkings, I just don't I
I
don't see how it applies any pressure to the shorts, and that's a big piece that I'm missing.
I agree, and once the DTC has control of distribution of the split, it effectively from that point on works exactly the same way as a forward split would. At least in what I can find, I'm not finding anything there that would expose any shorts to any risk that wouldn't be just due to positional leverage.
Yeah, I was trying to think about this the last night. One thing that could potentially be interesting here is that if we so this is another thing. If you look at all the academic literature, people have been studying from an academic perspective why anybody splits a stock at all, right? Because from the rational market hypothesis, it is a valueless accounting procedure, right? And so why would anybody want to boost why would anybody buy in and boost the value of this stock if this action is not providing value? Why does this value persist irrationally for a long time in the market? Um, and,
Well,
and so
yeah.
looking at
So, are you, just to clarify for everyone, because it's not just me and you? We're talking about the increase in valuation of stocks post split, the year after they split, and then sometimes on many stocks, several years after they split,
yeah
beating the overall market. Generally, when a stock splits, it will be not only be valued higher in the year following the split, but it will continue to be valued higher and achieve more growth and higher valuation over time.
yeah and it's so nobody really understands what's going on with the split, and people have been studying this for decades. And it's been really interesting to see because not only do they not understand why these stocks increase in value seemingly simply from the act of splitting it, But they also don't understand why managers of that stock choose to split it because they cannot find evidence. And you can make these arguments that, oh, there's the catering hypothesis that they're catering to a price point. But people have looked at it and shown that yes, more what they call less informed investors, which is code for stupid retail,
Yeah.
piles in. But they've done enough work to show that that act itself doesn't necessarily lead to an increase in price. And so, not only is it not clear why the value goes up, it's not clear why managers even choose to do it. So it's I don't know. I'm wondering. The more I look into this, I'm interested in what Ryan Cohen's. I mean, it's clear he doesn't like shorts, but he's got to know. I mean, he's got to have enough resources and people to talk to know that this isn't necessarily going to do any short bashing, right? I mean, the only thing I can really tell it's going to do is increase liquidity, which isn't good for the MOASS thesis. It's good for
Yeah.
running a company and raising capital in the future, but yeah, I don't know. There's a lot of misinformation going on about what these splits do and what they're going to achieve, and I don't know. To me, it seems like a net negative. The only real positive is there's going to be some uh, indeterminate amount of FOMO that's going to continue to pick up. And if volume goes up beyond what it was Friday, I'm going to start feeling really scared about my put position because if there's another wave of FOMO, that could carry us up quite high into the split. But if we flounder or if puts start coming in next week, then I'm going to get even more bearish, I think, for the short term. Because if last week was all the FOMO we saw, it could get bad.
Well, I think last week was hype FOMO, right? Like institutions aren't going to buy into a split the fucking day it's announced. They're going to buy into it before it splits, which could be all the way until like next Thursday. I do have a bit of a thesis around maybe, well, hypothesis, I would say, not a thesis, but around maybe what Cohen's trying to do here. And I'm not sure if he's informed enough that he's making the correct decision, because it seems to be kind of hard to, like you said, suss out the intricacies, and also why I kind of have a theory as to why stocks see price improvement after they split, and I think that's because of tradability, right? As options chains become much more liquid. um we're going to see the price is cheaper, so you can get more leverage for less money, and I think that attracts not only like day traders, but it attracts institutional trading, which is something that we don't really see a lot of on GameStop currently, right? We don't, like, outside of the big positions that move the stock every quarter, we don't really see a lot of institutional trading going on. We don't see big surges in the call OI or anything outside of like the volatility positions or OPEX and things like that, right? And I think that um constantly increasing like turnover in the volume not only attracts more long interest, but it attracts you know uh, it causes price improvement due to the amount of additional interest brought into the stock that wasn't there before. Like, stock splits were pretty common all the way up until like 2007, and then most of the stocks in the S&P back then traded like under $100, under 40 even. They would just hit $40 and split and over and over and over again. Um and ever since then they've become much more rare. I think like over 100 stocks in the S&P 500 now trade above $100. So that's kind of why I think we see some improvement. I don't think it accounts for all of it. I agree. But I do think that finance academic researchers specifically do not like to consider the effect of trading on stocks because all of their assessments of stocks are from a valuation standpoint. Um, so there's a bias there that I think maybe you're running into. Um,
Yeah, I agree. Well, and that's what they would call the irrational market, right? Because if the
yeah,
valuation hasn't changed, then there shouldn't be a higher price for after an act that doesn't change the valuation. But yeah, and there was one interesting paper I saw that was fairly extensive in its data set. Like you said, it became much less common after 2007. So a lot of this stuff sort of started to peter out around like 2005. But around that time frame, there was a good paper that showed um, that there was a measurable decrease in the cost to make the markets of these split stocks for various reasons. And they think that that decrease in the cost to make the market was translated to a decrease in the cost to trade that stock, which translated to just a average increase in price, which I kind of bought. I mean, that seemed like a much more subtle reason, but it actually kind of made sense, and that kind of goes back to the tradability argument. So I like that. Another interesting thing, because I'm a bear right now, right, or a cat in a bear costume. Another interesting thing from that same paper was they looked at the short positions for all of these splits, and they did find in the aggregate that um, short positions tend to decrease during from the announcement of the split through the split. But when they separated out um, when they separated out sort of the survivability bias, the companies that were doing well and the companies that weren't doing well, what they found was that the shorts were actually in the process of exiting before the split.
yes.
And for the case of stocks that aren't doing well, the shorts tend to just stay and they tend to be, successful at whatever they're doing with their short position. And that was really interesting because I started thinking about the fact that that news dropped about the layoffs the day after the split announcement. And it didn't, I don't think, and maybe others that are scraping this can go and look at when this letter was dropped from the CEO, but it seemed like it was pushed out by the media first, likely through short hedge funds, and then they quickly wrote a letter in response. But maybe that's not true. But it seems like they were trying to push, hey, if this stock is not actually doing better, the shorts won't leave.
So part of my thesis with what Ryan Cohen may be trying to affect here would probably involve what happened with Mike Mercupero. Um, I do want to. I'll get into that in a second, but I do want to let you know that some other effects of stock splits are the spreads decrease. Um, obviously the value traded goes up, right? But close to close volatility rises, but intraday volatility falls. So it really does open up a lot more options interest, especially with cheaper priced options, right? And as we know with GameStop, and this is something again that academic researchers would likely ignore or brush under the rug because they still view options as being traded towards their original intent, which is as insurance, right? And they are not, I don't think, effectively following the change in the value of an underlying due to its derivatives interest. And as we know with GameStop, most of the value in the underlying has been accumulated and driven by its derivative interest.
Yeah, I would agree with that wholeheartedly. That is for sure. I think probably my biggest point in all of this is that GameStop is what they would consider an outlier, right? I mean, we've already had enough things happen surrounding this split that the academicians who are aggregating all of this data, they would have thrown out this GameStop split when they were even analyzing splits as a whole because it's so irregular, right? I mean,
Yeah.
and so I just caution everybody going into this thinking about look at Tesla, right? I mean, there's this thing on Superstonk. Yeah, I shamelessly still go and read it every once in a while, even though I got banned. But I like to keep my finger to the wind. But
Yeah.
they have this chart that shows the progression of Tesla's price at each different point within the split progression,
Hmm.
and then they have the unfilled out chart for GME, and they're like tracking along, making this very uh, trying to push this message that GME should also rise to astronomical levels because Tesla did. But just
I don't.
just
Yeah.
stressing, there are thousands of splits that occur every few years, right? Hundreds a year. And so don't focus on just one because we're already an outlier, right? And Tesla probably was an outlier too.
Yeah, it
So
definitely was. But yeah, I mean, the fundamentals are so drastically different between Tesla and GME. And while I agree that Tesla had a lot of the same ETF exposure, it had lots of high FTDs, it did have similarities to GameStop. Those may not be realized in the same way. They could be. But we could very well be, in for a surprise. But I don't think coming in from the assumption that we're going to see the Tesla squeeze occur on GameStop is ludicrous. In the same way that, the you are here on the VW squeeze charts are stupid as fuck, right? They're just not the same position. It's true. It's I'm trying to say that nicely, and I feel like I didn't, but they're just not comparable. Tesla's not comparable to GameStop. VW is not comparable to Tesla. There's no relation there to be made. And yeah, I agree. Everyone seems to be caught in kind of a place where they just want to be bullish for the sake of being bullish, but that's always kind of been the case, right?
yeah. Just everybody watch your risk management. Don't assume it's just gonna fly.
Exactly. Yeah. And as to the second part where, I think maybe I see what Cohen might be trying to do here. So ETFs have to return dividends, or at least the prospectuses of the 6 ETFs that I read, have to return dividends to holders of the ETF in a pro rata basis, right? In kind. So theoretically, additional shares of GameStop would have to be realized in the holdings of longs on the ETFs, right? Those dividends are supposed to be distributed to the ETF holders, and that could cause potentially a recall on the ETF side. Um, it's at least very interesting how they would handle it, because unlike a swap agreement or a short position, they do have a fiduciary duty to essentially give those investors, or those investors are supposed to realize those additional shares. um and that would be true in their net assets as well, right? The ETF, if they currently hold 5 million shares of GME, and that holding is supposed to go to 20 million shares in order for them to retain their weight, that needs to happen. As we know, they can defer kind of that settlement. They can mark as purchased, not yet delivered. They can delay it, but ultimately at the end, XRT, for instance, will have to increase its real shareholding of GME to the post split amount, regardless of how much they have lent out.
Yeah, so I mean, I will admit, tracking the options on one stock GME, and now I'm starting to get into BBY. It's kind of a full second second full time job. So I am almost completely uninformed about the ETFs beyond the very basics of creation, but the actual mechanics I'm pretty uninformed about. What would be that time frame for that to occur? Because I know, the current theory is that they got a deferment
Well,
for
y-
28 plus 2, right, which would put us into this OPEX. But for the
well, I
div,
think it's either they got the deferment, like they filed and got the Rex code, or they didn't file, simply got 30 days and then failed to apply for a Rex code. But either way, the end result is 28 plus 2. I don't know if I've gotten to talk to you about this a lot. But yeah, essentially either one of these could occur, but they ultimately both result in the same time frame being realized. So, they could, apply for the 15C3-3, and or not apply for it and simply get a 30-day extension before they have to, and then not file because, you know, uh, they wouldn't be allowed to under the rules, or the rule they are allowed to file for would give them 28 plus 2 days.
yeah, this was the weird thing to me because I remember Turd showed us that the shares in the ETF went from like 2 million something to 7 or 8 million. It was like a 5 million share jump in
Yeah.
one day. And I haven't seen the updated value since then, but I imagine it slowly climbed as it did in the past. And so we didn't see any realized price action pretty much anywhere, I don't think, on that day or around that day from the basket that's in that ETF. So it
Yeah,
is
so
a question: where
we're
did it all come from?
yeah, well, I mean, where did it go, right? Like we see the increase in liquidity on XRT, but we don't see the price improvement across the basket that would be like that would cause that. So yeah, we're seeing the ETF settled in a way, and we're not seeing those shares bought. So
Yeah,
those shares.
that's why I still like your 28 plus 2 or 30-day theory because yeah, I don't know where that all came from.
Yeah, it's currently the thing that still makes the most sense to me. And if there's anything that we've learned over the last year and a half, it's that once something's created, it has to be settled at some point. So, um,
I
we'll see.
like the options chain is just nice because I can get all the data just about, but the ETFs are so opaque.
Yeah, they are. I mean, intentionally so, especially with XRT. But
Yeah,
I do think there is some potential there for share recall in the ETFs, which is, to be fair, where most of GameStop's institutional interest is. So, they may simply just have to. Uh, I don't see a way for but yes, I do agree that the time frame until we see that, right, could be up for interpretation. In Tesla, though, I think it was seen. Uh, well, it started to be seen, and then I think they got an extension after T plus 6 plus 35 plus 3 days, and then I think they got an additional extension to settle, because you see the big spike of FTDs, but you see them settle out like 6 trading days later. And that's when it started to really run post split like hard. Um, so they had to just start clearing out those FTDs, and the price on Tesla was rising so dramatically at the time that a lot of shorts were just couldn't cover the margin, right?
yeah. Tesla's hard, right? Because it went up and it confirms our bias, and it it feels compelling, but it's hard. Like I said with that study that showed that for the most part, shorts that get out during a split are getting out for other reasons already. And so Tesla, there could be some aspect of that.
Well,
Um,
I think I actually had a conversation with Stefan the other night, kind of about, because I traded the Tesla split back when it happened. Like I was super cash rich. I just closed out my short positions on like the S&P after the COVID crash, and so I was just looking for stuff to get into, and Tesla was very compelling at the time, right? Um, but I kind of drew up like a little chart for him when we were having our conversation on kind of where we saw like the realization of short positions closed and the FTDs and fails from the um can I just open this up over here? Maybe. Let me see if I can do this. So, knowing what we know now, obviously I didn't know this back then. I was just trading it, but this is the point at which the Tesla split occurred, and as you can see, like there's an additional period. Like we see immediately upon like T plus 6 plus 35 plus 3, we see an increase, but on that day we see a massive jump in FTDs on Tesla.
Can you draw an arrow where on the day of the split? I think I see it, but
The day of the split is right here.
I don't see
Wait,
anything.
hold on. My Epic pen is like way offset, so I've got to. There we go.
Oh, everyone drink.
Well, it's just because like the ratios are different on the different windows, but it's essentially the peak of that run. The day before the peak of that run. So the day after the split, it ran super hard and then it dropped like a rock.
When
I think it actually closed down the following day.
When was it announced?
Back here, I believe. Oh, nope, that's in the wrong spot again too. Hold on.
Huh.
So there's
okay.
I mean, there's some compelling shit there, but like you said, it's just because it's compelling doesn't necessarily mean it's going to continue to be true.
Yeah, because I mean, even just thinking about you showing that there's a delay in FTDs and then the CNS offset, which seems reasonable, right? We don't know what their deferments were at that time.
Yeah, I mean, we'd have to do a ton of work just to figure out if the same things are applicable. I do know some things about Tesla. Tesla is cyclically shorted very much in the same way GameStop is. It has massive open volatility swaps. It has, that same effect in the far ends of the call chain where you see massive numbers of like far out of the money puts and far out of the money calls. So there are a lot of similarities in the derivatives market to GameStop and even the OPEX. There's a similarity with Tesla, but how tightly correlated those are, it's really hard to say. And the valuation metrics are so different that it feels wrong to even approach it with the idea that they might be similar.
So I think even with all of our analysis, we're still kind of we could run now or sometime in the next month or so.
Yeah, I mean,
which is kind of what we've been saying all along.
Hopefully this week I'm hoping that we see heavy short pressure and a build up of that negative delta again.
It would excite me greatly.
I think that's what ultimately we're looking for. And based on January 7th, after XRT started to get its liquidity back and for no apparent reason, I think we'll see that. I think we'll start to see that. I think we'll start to see puts on XRT increase, right?
Yeah, I don't know. I mean, I don't know that seeing or not seeing the after hours run on Friday means that they don't have liquidity, new liquidity. I still think that thesis holds water. That once the reg show process begins, because I mean, you've been saying, I believe that they go from being audited by either the SROs or the S&P or someone to being audited by the SEC, and we all know they're all watching Pornhub. So,
I mean, in the comments that I've found regarding the SEC audit as it pertains, the SEC reg show
reg show threshold audit as it pertains to ETFs. It is outdated. It is an audit system built specifically for equities, and ETFs really aren't equities, right? They're more of a mutual fund, in a sense, right? And represent a much broader swath of the market than an equity would. And they also have, these liquidity mechanisms not available to any single equity, right? So yeah, I think the SEC audit fails to address the same points of interest that the S&P audit does. I'm not a fucking accountant, so I don't know
Sure, but it must,
specifically.
right?
Yeah, I don't know
I mean,
specifically what they're
expertise been on
dodging,
that
but
show for like decades, right? More than a decade at this point,
I mean, it just goes
off and
like
on.
what's so interesting is
And
about when they cycle it, right? Like, they got it off threshold only to put it right back on the futures expiry, right?
yeah, I do think
Which
you're
is the
onto something
exact same
there.
shit that happened in December and the exact same shit that happened last March, right? Like,
Yeah,
it's
so
it's very interesting.
and I do think you're onto something there, which makes me hopeful. I mean, we are running out of time for them to push down, and we would like to see them push down a little bit more.
I think if they
If they
if they
start,
push down now and they push us into that low range in order to cover, right? That would be the most rapid decrease in price that we've seen on GameStop since last year.
yeah, it would be interesting, but that's what I'm looking for. As it seems a little confusing, but I'm looking for this rapid down,
I wonder how much
or at least
risk
an
I wonder how much
attempt.
risk there is in pushing us down into that level given the amount of retail interest at those price points.
I think last week was them just kind of waiting to see, how much retail is going to push. They might wait another day to
It
see if there's
feels
another wave.
to me like, from a trader perspective, right? Like, based on no actual analysis, but like just gut feeling. It feels like the risk is too high. They're like almost like they're very reserved and in wanting to drive the price down right now. Remember, there's like, in these cycles there's some risk to the downside, right? And that so much retail interest could accrue, especially in the options chain, that if they are trying to get out or they are trying to stabilize their position, driving the price under $100 I don't think is beneficial to them. Right here at this price point, this like 126 to 130 range, it remains choppy. It's bullish enough that people are losing money to the upside. It's bullish enough that people are losing money to the downside, right? But effectively, we're still kind of trading flat, right? Like, they just keep getting us in these ranges and letting the price trade flat. And we know they have the power to drive the price down hard if they wanted to, right? Like, there's no question about that. It's just, why aren't they? And
Yeah,
and that's where I think that there's some risk to them bringing the price down too much. Maybe this time around they don't want retail to pile in and drive volatility up, right? Especially if they're going to have a potential recall on their hands through these ETFs. I think that would present a lot of risk to their positions, and they would want the price to be kind of stagnant and the options chain not very interesting, right? At least not cheap.
I would say if I don't see, at least a concerted effort to push the stock down Monday and Tuesday, it's probably going to be unlikely that we will see significantly lower prices going into the split. Um, if they start pushing hard, and they're successful, I think that could mean that it's gonna flip around pretty quick and violently.
Maybe
Either
maybe
way,
something
there.
maybe something similar to like March earnings. Remember that?
Yeah, I don't remember. You're
Uh
you're much better at remembering all of these specific events more than me.
so, GME earnings were here in March, and we were trading at about 88. The price had slowly started to increase in anticipation of earnings as, you know, institutions, I believe, started to come into the chain here, and we started to get a little bit of positive delta going. And, you know, they just slammed it as hard as they fucking could post earnings, and then we kind of just took off like started taking off like a rocket into March OPEX, right? But even this like $10 price move was important enough for them to you know, try to obtain, and I agree with you on this, that like they really seem in all the other OPEXs to desire hitting that low. Like it seems very important that they start covering at that lowest possible price point.
I mean, that's what they were starting to do before the split announcement.
Yeah, I think so.
When
Yeah,
they
I think we
pushed
were.
us down to
I think
113.
I think last week without the split announcement, we would have likely hit sub 112 going into this week.
I agree too, and I will never forgive RC for doing that to my puts. No, I hope everybody makes money. I'm not. I'm just bullshitting. But,
I know.
yeah. Yeah, I think it could go down. So just be careful as you're entering your positions. Either DCA or just wait.
Yeah,
Put,
I agree.
if
And
you can't,
patience is hard.
if you can't handle short-term downside, and you're in positions, just set risks, even if they're a little negative. It's always better to get out a little negative than to get out a lot negative.
Yeah, I think if you're already in positions, you should be, you know, considering DCAing. Hopefully you've not expended all of your capital in one go. What's DCA? Explain with Barbies. It's like you buy a Barbie at full price, and then you buy the next one on clearance, and then you buy another one at full price and the next one on clearance, and then your total costs, like your total Barbie budget, is halfway between the two costs. You act like Wall Street bets won't be coming into calls at open next week. I'm sure they will, but you know, if they're push, I mean, first of all, let's remember that Wall Street bets got fucking roasted on Friday.
Oh yeah,
They got burned so fucking hard. When I told everyone to be sus when others were bussing, I meant it.
I was watching those weeklies pile up on Thursday, and then I started watching it deflate on Friday, and literally I spent like half the day just like cringing, just waiting for it because I just saw these weeklies just starting to drop off the chain, and it was a massacre. But most of the calls for this week stuck around. So
Yeah, the
we'll see.
130s seem to stay on the chain for 7:15 expiration. But we won't know till tomorrow, right? A lot of those could have been closed end of day Friday with the market downturn.
Yeah, my time of sales estimate shows that wasn't too bad, but yeah, a lot of weeklies actually sold off, which was weird. I guess not too many diamond hands to zero at
Where
the
can
last
one
minute, but
see the chain? You can get information from the OCC, CBOE, Polygon, TDA. There's a lot of sources for the options chain data. It just, you know, unless you're paying obscene amounts of money every month, you have to do a little bit of work to
yeah,
compile
we've
it.
we've kind of created a sort of Frankenstein's monster for our options flow. We get our end of day options flow from Thinkorswim, I believe. One of our quants, who's now a moderator on the Discord, does that like clockwork every day. So thank you for that. We get our updated OI the morning after the close, the previous close from CBOE. They have their delayed quote service is free. You can just download the whole chain the next morning. And then time and sales, I'm currently getting it from Market Chameleon, but you can get it from a variety of places.
Something else I wanted to talk to you about, since I have you here anyway. Dork's model. It's really interesting that it's kind of setting up within the exact same expectations that we would expect from OPEX, right? And it didn't really give us that same setup in June, but it's giving us like a very similar setup to what like maybe we saw in March, maybe bigger.
Which graph are you referring to? Is there a
Oh,
graph I can look at?
probably. He posts so many.
I'm looking because he's been doing volatility around splits lately, so that's most what I have.
Maybe he can just post it if he's around. Let me see if I can just ask him. Oh, you know what? I think I can. Well, I don't want to do that here. And
Yeah,
and from
for
his
those that
model, it kind
are,
of looks like we're moving into exactly what me and you kind of expect, like a hard push down this week as liquidity's a little bit freed up on the ETF side.
yeah, so for people to know what we're talking about, and as far as I understand it, Dork is looking at the essentially the volatility, the volume weighted volatility of GME versus various ETFs like XRT, and looking at periods where there is an alignment in the volatility between the two, for lack of a better word. And so there are periods where they are highly aligned and periods where they're highly misaligned, which gives some indication that that they're they're being linked in some way temporarily. Um, and I can't remember which one, what each thing demonstrates. I'd have to see the chart to remind myself, but it
I know he might not be around right now, but I DM'd him if he comes
re-
back with
yeah,
something. Otherwise,
regardless, I
I'll share
mean,
it on the
regardless
Discord after.
of, yeah, regardless of which one is which, high or low alignment, we do see a shift in the degree of alignment around the OPEXs, and that that shift appears to be occurring now. But I have to dig in because Dork's model, and maybe if he's listening, he can weigh in later. But Dork's model uses the tick data, and I believe calculating the volatility based on ticks will be highly dependent on the size of the ticks, because you're sort of losing or gaining volatility at different time frames. It's being hidden within
Yeah,
the ticks in some
I think that's
cases.
why he smooths it so much.
Yeah.
Because yeah,
I
otherwise it would be kind of all over the place. But the
yeah,
the
full time in
wider
sales would
candles,
obviously be
the wider
ideal
candles
because
are
that would.
weighted more heavily, I think, to compensate for that.
Okay. Yeah. It's just full time in sales would obviously be the best for that, but
Yeah,
you
we
know
don't.
how it
I
That's not
don't think
free.
we have the tools to do that. Do we want to take some questions?
Sure, I got a few more minutes. My
All
kids
right.
are gonna get hungry soon, but they're pretty quiet for now. Someone was wondering if I lived in a zoo. Those are my kids just jumping off the walls.
From Dominic, thank you. We're so lucky to have you and your efforts. Fucking legendary. Thanks so much, Dominic. I appreciate that, man.
I will be streaming earnings. I will be streaming Girk, streaming earnings just like you all will be streaming it.
Are you
Takes on my
a
exit.
are you a
Well,
binturong, a species of bearcat?
no, I don't know what I am.
You know what the issue is here is I feel like I still see horns in the picture. How did you fit them inside the bear suit? I guess that would be my first question.
They're actually they're very floppy. My horns are not very hard.
Oh, okay. So you just kind of comb them back, tie them up.
Yeah.
What's the
I think
reasoning
too.
behind increased liquidity post split purely due to increased retail interest? Well, first of all, the biggest, I mean, I think I can answer this one. The biggest reason for increased liquidity post split is because people sell. Psychologically, when people have more shares post split, they sell. They sell shit because they just went from having X number of shares to X times Y number of shares, right? And that makes them a little more paper handed. That may not be the case with GameStop. You know, we've all been indoctrinated into this buy and hold mentality, and we'll see if that persists. You know, the GameStop movement has defied market psychology in many ways over time. It may yet again surprise us.
Yeah, the selling doesn't necessarily mean the price goes down, right? Because you also have more
Yeah, someone has to buy those shares that are sold.
You get a whole new a whole new following of bag holders to come in and take the sales of the old one. So it doesn't necessarily mean more volatility. It means more liquidity. Volatility tends to go up though.
Do you think 200 is likely? I think that'll be relative to our gamma max and whether we experience an OPEX run or not.
Yeah, we'd have to see like a couple million volume kind of coming. And you know how it always starts like the volume just kind of starts picking up and then it just keeps going and then and then you get like this big enough price swing that everyone's just like, oh, where'd all that volume come from? I think this is an OPEX, and then everybody piles in, and then it just starts rocketing. So, yeah, I mean, 200 maybe, but I mean, just follow the price action. Get out when it starts going down.
Someone wants to know what your option strategy is. I would preface
You
this
do
with,
not want to know that. I'm not even going to tell you because no, you don't want to know.
JFresh is not a trader by
I am not
profession.
a good trader. I can't tell you how many times I don't even have enough time to follow these. Sometimes I'll buy options that I just don't have the time to manage, and I just didn't think about it at the time. And then I'll be like, oh, I have this meeting I can't blow off, or that I can't focus on my phone, and I'll just like, let's see, what was it? There was, oh yeah, I wanted to short. It was like last week we went up to like 126 or 127 at like 10 in the morning. And I was like, oh, I want to buy some puts on that. And I would have timed it perfectly because by the time I got to a computer where I could have actually done something, it was already back down to like 122. And you don't want to trade. You don't want to know what my trades are. No, they're garbage.
Let's say this: JFresh has disposable income and an interest in stocks.
Yeah. most of my financial assets are in asset-backed debt, aka mortgages and home improvement loans, and retirement accounts and mutual funds and market, growth funds. This is just, I just play around with more money than probably you guys will ever know in your lives, but I just play around with
I mean, flaunt it if you got it, I guess. When you say options, when you say options holders are exposed to more leverage risk, wouldn't a 2% move pre and post split be identical? Wouldn't a 2% pre and post split move be identical? I mean, it kind of depends on, yes, but it depends on which side of that trade you're on, right? So, the more options you have, right, the more sensitive that position is to changes in price in the underlying. And that's the risk of increased leverage, right?
You also have the fact that like the price is going right. I mean, the options prices are kind of more on absolute terms.
Yeah.
And you're just simply and there's more. I mean, the psychology of it is different, right? There's more round numbers to hit on the way up or down.
It's true.
Right now we're thinking in fives, right? Everybody thinks about 120s, 115s, 110s, 125s. When we get down to 30, people are going to be talking about 29s and 28s and 31s and 32s. And so it's going to be a little different.
Yeah, it definitely is. Also, cheaper options will mean more highly leveraged positions, which will mean
Yeah.
worse management.
Yeah, it's exciting, but it's also, I mean, it's gonna be wild.
I think you
It's gonna be
mentioned
weird.
getting into a position before Wednesday, as we can see some ups. Why Wednesday?
Before Wednesday? I don't think I
Hmm.
said that.
I don't think I said that either. And I'm looking to Wednesday could be possibly a day where we start to see a turnaround if we go down hard Monday and Tuesday. Like we could see a bottoming out around midweek. Um, that's theoretically when like the options, like the short side options interest tends to kind of level off on weeks where we were shorted into the midweek. Just because call side options interest becomes much cheaper around that point in time. Thursday and Friday as well. But that's I'm going to be basing my positioning off of what happens over the next several days. Wednesday is kind of a midpoint. I don't know if I'll be in the entirety of my position by Wednesday. I may not have entered it until the 18th or 19th in its entirety. Very very similar to June. I built up my position very slowly and patiently, and ultimately that was the profitable decision, right?
Yeah, I mean, for me, I would actually be much more excited if we see downs Monday, Tuesday, and then a settling out on Wednesday. I mean, that's a pretty big indicator to me. I would be more willing to get into a position at that point for OPEX. If we just kind of trade, just kind of just bleed upwards or just bleed flat or just kind of flop around, I don't know. I don't even know if I want to play options on this one, to be honest. I mean,
It's
there's just
risky.
too much going on, and I can't. There's too much going on that has nothing to do with like anything that we're tracking. There's so much market psychology that's going on right now that makes this very risky.
Yeah, I agree. Also, the macro picture, which a lot of people ignore when looking at GameStop, but almost all of our price action Friday to the upside driven by, active funds, which, currently the shorts seem very unwilling to push back against. And, that could be due to increased illiquidity in GameStop, meaning that, that active fund buy pressure represents a lot of risk on the short side. And historically, if you look back last year, GameStop didn't give a shit about what the market was doing. If they wanted the price down, they were pushing the price down, and we're not seeing that right now. And that could both be extremely bullish or very very bearish, right? I mean, it could mean that they've walked away or they're stepping away, and they have no more interest in participating in this position. But it could also mean that they just simply can't, and they still need to. We just don't know. There's no way for us to
Yeah.
tell their positional psychology based on
Ex-
an effect like that. And as long as the market continues to remain highly volatile and in a bear market, it becomes even more unpredictable, right?
yeah, except on days where the SPY goes down like 0.5% and
Oh yeah,
GME
then we just
drops like
yeah we we we,
7%.
we drop like a rock. I mean, that's kind of what's so compelling to me is that they hold
They're
on
still
one
doing
second.
that every
When
once in a
setting
while.
stops on options, OPEX week is so volatile that it's tough to set stops. How do you manage risk on OPEX week?
Very carefully.
Yeah, it's hard.
I mean,
I
it's
mean,
impossible. I mean, everybody asks.
stops aren't gonna make you a perfect trader. They just help you not lose so much money.
Yeah.
There's times when they need to be placed and times when they need to be pulled back. Um, you know, uh, and the knowledge of that is something that is a skill set that you have to learn over time. So, for the inexperienced trader, stops are a catch-all, but they don't mean that you're going to realize more profits. They just mean that you're going to lose less if your position moves against you.
Yeah. I mean, you're the only one who can answer that question. Just stop asking. I know everyone is going to continue to ask, but stop asking Girk for what to do, how to set, because it's all about It depends on your position.
Yeah, and every position is different. You know, it's like a you're asking me to analyze like your fingerprint, and I've never seen it. So it's you know, it puts me in a place where like I can give you these broad spectrum answers, but I can't specifically tell you anything really, right? So I'm kind of just in essence I'm you know, I'm giving you like the textbook answer to the issue that you're facing, but it doesn't really answer your specific problems because your position is an unknown factor to me, right? Like I have no idea. It's just a variable. I can't tell what it is. I don't know when you bought it. You know, options are all different based on the time you bought in, based on the current value, you know, based on your own portfolio and your management of it. I don't know if you know you have your life savings at risk or you know like just some throwaway money. Like every position is different, and you really shouldn't be entering these positions or taking on this risk if you don't understand, at least on the most basic level, what risk you're taking on. And that risk will always be the premium paid, right? So whatever options you're in, you should assume that your greatest loss is the premium paid.
Yeah, I mean, I think a good rule of thumb is if you're asking Girk or anyone a question about how you should be conducting your trades, that's a good indication that you just should be trading. I mean, it's pretty blunt, but
Yeah, I mean,
you, you need,
there's a learning curve, but I agree.
yeah, I mean, there's nothing wrong with trading stocks, doing simple buy and I mean, 5 to 10% a year over your lifetime isn't terrible. It's not the best thing in the world, but it's better than
Compounding.
what
It's
it's
compounding.
it's, it's better than what most people in this Discord who are learning are making right now in their actively managed funds. So at least you're, I would say I kind of agree with Girk. You should only actively manage at least while you're learning and before you've come up with a system that's successful. You should only actively manage money that you can afford to see just disappear. That's my opinion. But
Hope is a powerful drug, and for those of you that are over leveraged or mismanaging positions, I do wish you the best of luck, and hopefully you get some capital together. I understand taking on more risk to realize more capital, and then hopefully once you do realize more capital, you start to take on a much more risk averse approach to the market. But if you don't, you know, Wendy's is hiring at
yeah,
$20 an hour here in New York City. The Dans always need extras behind the dumpster. So, you know, that's a decision that you're going to have to come to on your own ultimately because we can't make it for you. We're not financial advisors.
I would say too. Maybe try on other stocks and just not on GME. There's
Or
just too
just
much
paper
emotion.
trade, you know, don't use
Yeah,
real money until you've got a system in place that makes you money.
because like I was telling Girk this the other day, it's like on other positions, it's so much easier to make money because I don't care about making more money, right? I mean, I've been swinging cat just for fun these last couple weeks, and I got in twice at a reversal on the bottom trend around 174.
Yeah.
Um, it
Dude,
immediately went up like 10-15%, and I set a stop like 5% below where it was and just let it ride and I made like 30% on both of them, and it was just, I wasn't even watching them, right? I didn't care at all. It was like, oh, I made 30%.
not to toot my own horn here, but Pickle's picks were fucking phenomenal this week. I think every one of them printed.
But
Like
that's the thing,
30 like 30%.
they only print, 80% of them only print if you execute them well, right? And so
Yeah.
you could still it could do exactly what you predicted, and you could still lose money if you didn't execute it correctly.
Oh yeah, I mean there's people right now still holding cat through both bumps. waiting on that bigger move to the upside, which will likely occur over time. And I know most of them bought plenty of theta, so they'll be probably fine. But they're gonna have to deal with some downside in that position while they hold it. But yeah, you're right. If it's not executed properly, it's worthless.
All right, so I have about 5 minutes left.
All right, let me see if I can find something worth answering here.
Let's do like a.
Can you tell me how to trade Ader? Don't.
I know nothing about Ader.
How does one paper trade what the Dans do behind the dumpster?
Pornhub.
Yeah. What level of risk would you consider YOLOing into GME shares and then selling CCs at a price higher than you paid? If you're selling at a strike higher than you paid, like if your cost basis is below the strike you're selling a covered call at, that covered call can be nothing but profitable on that position. But remember that because you're holding you have a large capital allocation in the underlying stock, if the price doesn't hit, right, and you simply collect the premium, you're still, the rest of your, like, everyone's so happy to make $500 a week off a cover call without considering that, like, the price of their GME shares has dropped by like $15 a share, so you have to weigh that, especially if you guys are like looking to wheel stocks and stuff. I see a lot of people are like, I'm gonna buy 100 shares of this and sell cover calls on it. It's like, but it's gonna take a very long time for you to make back the initial capital spent on those shares, especially in a downward trending market.
Hey Gherkin, I have to pause here for a minute because I think I've uncovered an interesting correlation here.
Yeah.
I think the cam girl bots only post when we talk about pornography. So let me see if I say the word Pornhub if they post again. They just posted like 3 of them when I said that word the last time, but now there's.
So we just say things like cam girl, Pornhub, sex,
hot boys and girls chat.
Yeah.
Theory smashed.
Oh well. But give it time though. Maybe it's just there's a delay.
Yeah, they don't want to be too intrusive or they'll get banned. Feet pics.
All right. Are there any? This isn't Matt Furlong. It's Jay Fresh. Not to be confused with Dr. Gingerballs, who we have established is in fact Turdferg. So overall, do you think the split will be positive? I mean, historical data points to splits being a positive. So
yeah, I think
as a long-term investor, you should be very happy that the stock's splitting. As a covered call seller, you should be happy the stock's splitting. It's bullish in a sense.
Yeah, I'll just say.
Except we're none of those things, really. Right?
From a statistical perspective, stock splits average an increase in price of around 3 to 4%. We've already hit that, so we're doing great. I don't know what else to tell you.
We hit that like every other hour.
Yeah. What's my financial background? Nothing. I don't know. I do a lot of research in mathematics, and finance has just caught my interest. I am what the financial industry would call a great scalp if they could, but I know nothing. I have no financial background.
I'm gonna scalp you into my 3x leverage ETF fund that we're gonna build.
I want to create a fund that inverses the number, that creates the same amount of shares in the underlying stock as the number of shares that have been DRS'd. So like a 1x inverse DRS fund.
That could be interesting. Can you talk about MOASS possibilities post split? Is it fully dead? I mean, I would say that it's like an event that reduces the probability of a MOASS occurring into
Yeah,
the
I mean, we'll have
future.
to see, right? I mean, it's already been established that if people continue to buy and hold,
Yeah,
and
illiquidity
this
will
doesn't affect
remain.
that,
Yeah.
and then that remains, and that will be very apparent in the volatility and the volume, then this could continue on for a while, and a squeeze is still on the table. But I mean, I think we've talked enough now to say that at least in the very long term, when any of the volatility of the near term event of the split dies down, liquidity increases. Liquidity is very bad for a squeeze.
Yeah.
So it's great for raising money, right? So GameStop is going to improve their ability long term to raise capital, which is what the stock market is for. But it is going to hurt the potential for a squeeze, and we shouldn't be surprised if this is one of the motivations for why they're doing this. I mean, they raised capital last year at a point when we were most likely to squeeze, right? So they're just running their business. So
Please elaborate on why GME put OI went from 692 to 516 on 7/16/21, but the price only went up 10% 2 days later, and that was it. Call OI dropped on 40% on 7/16/21 too. Well, I mean, you're looking at like almost an equal amount of put and like negative and positive delta shed on the same day, and then asking why the effect of that was so minimal. I
yeah, you have
mean,
to look at the net of the entire chain,
yeah, you
because
can't.
the market maker isn't segregating their hedge for each individual option. They're bunching up their total aggregate hedge for all of the options, both short and long, calls and puts. And so there can be times when lots of puts drop off, but lots of calls drop off too, and their hedge doesn't change, right? There's also times like right now where I believe that the overall hedge of the market maker right now is pretty much likely very few actual shares, right? Their call and put portfolio that they have sold almost kind of balances itself right now, which is
What
why
the
I want to see more puts.
what the hell is LTCM? The arrogance of LTCM is the historical answer to Will MOASS.
So there you go.
Okay, I don't know what LTCM is. Are your DDs still relevant? Yeah. Like, has anything you learned since affected whether or not you'd recommend any of them? If so, which ones are outdated, for lack of a better word? I don't know if any are outdated. I mean, they've all been building, right? Everything that's been built has been built upon the top of the old DDs. So if anything, they just represent a growth in our understanding and knowledge over time. I don't think any of them are particularly outdated, but may give you insight into how the theory grew.
Yeah, I think the biggest issue right now is that there's so much that has been researched. There just needs to be better summaries.
Probably,
Um,
yeah.
so someone like I mean, this would be a great time for Andrew Money or those folks to shine, right? The people who are rehypothecating the due diligence.
Like
If they
I
could
want to
just
go back.
summarize
I
it.
want to go back and like, because I haven't done like a big summary of our understanding since November. I want to go back and do that, but I also want to like investigate what's going on right now, and that's
Yeah,
seems
yeah,
far more important to me to live in the moment than to live in the past. Um,
yeah.
but at some point I will probably go back and tie all the things together and do another big like DD like that and a big summary of where our
You know what we should
understanding
do?
is.
We should write a book and publish it on the GameStop NFT marketplace.
Oh fuck. And then wait, does that mean every time someone loads it up to their Kindle we make money?
I don't know. We'll find out.
How do we sell calls to people on that?
We'll only sell 10 copies.
Perfect. It's been much longer than 5 minutes. Get the fuck out
Yeah,
of here.
I gotta go.
All right,
Thanks,
man. I'll
thanks
see you
for,
later.
yeah.
Have a
All
good
right,
one, dude.
take care. Yep.
All right. Do you believe GME needs capital due to terminating their CFO? Not necessarily. And a small portion of their workforce shortly after announcing the split. I think they're cutting back. I think Ryan Cohen, if there's anything I understand about reading into his management style over the years, is he is all about efficiency and he does not suffer dead weight. I think if he feels that someone is dead weight or holding back the progress of the company, he will cut those positions. Does anyone at Global X to set up a cover call ETF of all the cycling beam stocks? That would probably be the most profitable fund of the year. What's the best data point to look at for net hedge? Put call ratio or put OI versus call OI or something else? Put OI versus call OI across the entire chain. More collaboration with JFresh, especially if we see dramatic moves. This is cool. We'll see. He's a busy guy. You know, he's got a job and a family. What about the DD for this weekend? I'm kind of doing it today, right? So I feel like the message put forth here on the stream when I can interact live is more valuable than me writing it all up over the course of 8 hours and then spending the next 48 hours answering questions on the write-up. Whereas, you know, this way you guys can just get it live, you can interact with the information. I think the learning experience is much better, and I think it's clearer in the message that I'm trying to get across. So, you know, it's always a decision for me between, you know, posting it on Reddit or, you know, talking about it with you guys. And I think these talks lead to more understanding than me publishing DDs do. You mentioned contracts see their most decay 30 days out, begin to see their most decay 30 days out. They see even more at 7, like every day forward. The depreciation of the underlying like derivative increases. So they hit the turning point in the slope at 30 days out. Yes, I do understand that August calls will hit some of that slope. So the rate of depreciation due to theta decay will increase as I hold the contract. But, you know, I for the amount, the difference in leverage cost is like 3x. If I become a pontiff of VWAP, I expect the books to be dedicated to me. Interesting hot dilfs in your area. We'll see. It'll definitely pay for the publishing, you know. Opinion on how the split will affect the variance swap. I mean, it won't, right? The OCC has already released a memo on how they're handling the options chain, so we won't see any repositioning. Maybe a little because of increased volatility following the split, but we're not going to see the entire, you know, swap hedge positions move, which we would have seen if, you know, there had been 2 separate chains. I'm not a fan of the OCC's decision. I think it goes against previous actions, but ultimately it's at their discretion and they've chosen. If they recall shares, it doesn't necessarily have to happen next week. Latest the recall covering can begin 7/19, 7/21, T-2. Yeah, it can, recalls can happen after the ex-dividend date. If they're recalling prior to the split, if those positions are just going to fail, that can kick the can quite some time before we see like the real effect of FTDs on the split, right? Are you working with API to get data from Ameritrade? Yeah, we compile it in a database. I know Downs is this week will be compelling, but could you clarify what would be a perfect storm that would inspire building a stronger position into the split week? I think if we see a really hard slam Monday and Tuesday, I think if we see a large increase in negative delta, large increases in put OI on XRT over those 2 days, and a bit of a stagnation into Wednesday at the low, I think that would be very compelling. Things I'd be looking for into the end of the week would be smaller funds possibly recalling shares, driving volumetric price improvement, but over short, like in short bursts, not a consistent covering like we see, or like retail FOMO like we saw last Thursday and Friday, but like volumetric bursts of covering would be very interesting to see over the coming week. Higher than average volume moving out into the end of the week. Those will be things I'm looking for to increase the position size I have for OPEX. Don't forget that, Dominic, I have a lot of fucking shares, man. Whichever way this breaks, I'll make money off of it, right? And take that into consideration. Some of you that just want to play the upside of this, there's a lot of income potential off of your current shareholdings post split. You mentioned putting more money behind this OPEX run when the split was announced. Do you still feel this way? Yeah, positionally, I've already dedicated like a specific amount of capital, and I did increase that when they announced the split. We'll see if I deploy all of that. I haven't decided yet. I started to deploy a little bit last week into some kind of not so delta sensitive, farther dated calls, just to capture any possible exposure from something that could or could not have happened Friday night. And could still happen into pre-market tomorrow. We don't know. But yeah, I would say that overall I'm not currently very invested in OPEX, but I do plan to be to some extent. I am looking for specific things. Like I'd love to see the borrow rate start increasing this week. That would be a big signal for me. Will they wait for an entropy swap entry until after the split? I think they're already holding one. Anything that will happen to CFD leverage positions? Oh, dude, I'm not even looking into what's going to happen with CFDs. My best advice on that would probably be call your brokerage. See if they can inform you better on how CFDs are going to be handled. What's up, Bronze? How you doing, man? Can primes not recall their shares and request 4-for-1 from shorts and cash after the split to keep shorts from covering? They could. But most shorts would probably just cover at that point instead of carry. I mean, sure, yeah, the loan amount could increase and they could just carry the debt forward. But at some point that would have to be satisfied, and the longs would want real shares delivered, not cash in the future. They can't just synthetically create the recalled position and then also receive cash for it simultaneously. Can you talk about this income potential? I mean, you're gonna have a bunch of shares. If you have 200 shares now, you'll have 800. Volatility is probably going to increase post split. That means higher premiums on call contracts, which means far more money to be made from covered call positions. And for some people, finally money to be made from covered call positions. There's many people that have 10, 20, 50 shares that currently can't sell covered calls. They can't make any income on their position, and that will be a huge advantage to them following the split and maybe the years to come. You think we'll see deep in the money call exercise and keeping the price a bit up? Maybe. Since the chain is splitting and no new chain, does this have no influence on entropy swaps? Yep, doesn't affect any positional hedging that's in place. Everything's just divided. Why do we need more of a price decrease to have confidence in July OPEX? Aren't 150K XRT puts closed for June? Yes. No. First of all, meditation, there can never be enough confirmation. but as far as their positional management goes, this is what we expect from them. You know, the disappointment in them not doing what we expect is, you know, primarily driven by the fact that it means that there's something we don't understand, right? And anytime we don't understand something, that puts us at a disadvantage. So we want to see the things that we expect from them, because that means that our understanding is in line with what is going on. Later, Lawrence of Arabia. Didn't 2021 have 2 months where SLD didn't drive the market down? Yes. Can you explain the reason for the difference? Smart money has larger cash position currently. Yeah, that's, I mean, just not a lot of I mean, it wasn't, they were key moments, but October was one of them. You know, it's that there was sufficient liquidity already on the sidelines, and, you know, likely not a lot of assets needed to be sold in order to provide the liquidity deposit necessary. So I think a lot of what we're seeing is, you know, they're selling off assets across the market in order to maintain margin. Right now, though, you know, we are in a directional market. We're not really trading flat or anything, you know, so it's very likely that they are leveraged one direction or the other. They're probably leveraged very heavily to the downside and will most likely need to deposit liquidity in order to maintain those margin positions. That may have not made any sense at all. Oh, well, can one offset the risk of the other in any way? Thanks. With options trading level 1 CSPs and CCs, this can be purchased in tandem to offset the risk of one to the other. Like, I see a CC and then maybe a CSP plus 25 or such. I don't know if one really offsets the risk of the other. I mean, you're talking about a strangle, like, so, sell a call, sell a put. That has risk directionally. If the price of the stock moves hard in either direction, the that leg will be at risk. Like a cover call isn't a bearish bet as so much as it is a bet that the stock is not going to experience any significant price action. A CSP is a bullish bet, right? So they're not quite inverse each other. And that has to do with capital allocation because you own the shares. So when you sell a cover call, you're already long the underlying. So you can't really be bearish on something you're long on, right? You can hedge both sides. You can hedge CSPs with puts. You can hedge cover calls with calls with the inverse trade, the long call or long put. All right, guys. I think we've run quite long today. And that's about it. If there's any questions that you want to ask or didn't feel comfortable asking on stream, I'll try to answer them in the DMs. Pickles picks will be out tonight, probably around midnight. Same usual schedule. Make sure you check them in the morning. Also check for any updates in the morning. To play devil's advocate on your take on this SLD cycle, they could alternatively close their hedge positions to avoid having to provide liquidity. Yes, this is result in the market going up. Sure, but then they'd want liquidity in order to reposition those positions, right? So, you know, either way, if there's a reason for large swaths of funds to want to positional into directional macro movements, then there's likely to be a downturn in SLD. Also, don't forget CPI data comes out that day. That could have an effect. If CPI data is showing some improvement into the more dovish Fed announcement, slightly more dovish Fed announcement last week, that could see a significant turnaround in the market. Pickles picks on Discord. It's for Dillionaires and up. So if you're like a Cornishon, you're not gonna be able to access it. Thanks, guys. Everybody enjoy the rest of your weekend. Thank you so much for hanging out and tuning in. I appreciate it. I'll see you all tomorrow morning. Have a great night.